Earlier this month, we made beautiful gains on GBPCAD and EURUSD. It was good, it was clean, it was juicy. But last week, we took losses on GBPUSD and USDCHF, and yet we are still floating in solid profits. Real trades, real losses, still profitable. And in this video, I'll break down exactly why, so that you can build a strategy that survives anything the market throws at you. If you don't know me already, I'm Kojak's Pro, a seasoned swing trader, and I've been at this game for over 3.5 years. As you can see, it doesn't matter how good you are in the game. Obviously, losses will be less when you're better and when you're more experienced, but it doesn't cut it out entirely. So we're going to be transparent and review these losses and show you how it's done. Then we'll see what other trading opportunities we have in the market. If you're new to this channel, subscribe. Now let's get into the video. Let's start with what went right. First up, GBPCAD. We caught a clean break and retest of a daily level with break of structure, and obviously our counter trend line break, which we love to trade in the context of a bullish trend. Momentum was on our side. We hit our first take profit level and closed out some parts of our profits. EURUSD did the same. Beautiful trade, a clean break and retest of our counter trend line with break of structure. It went all the way to take profit. No complications. These were A-grade setups, high conviction, clean execution, and a clear risk to reward ratio. Both trades delivered not just profits, but confidence. But that doesn't mean we win every time. Now, let's talk about what didn't go as planned. GBPUSD looked like a breakout. It was an actual breakout, as you guys can see. But clearly, the market gave us some profits, came over to this point here, and decided to tank all the way down and stopped us out. This was a clear break and retest of structure, break and retest of our counter trend line. However, GBPUSD came to this point right about here. I'm just going to draw this level right about here. It came to this point and created what looks like a bearish reversal pattern right about here, with this point being the left shoulder. If you guys can know exactly what I'm talking about here, the head, and this being the right shoulder. So technically, GBPUSD came to create a head and shoulder pattern that has seen this trade to the downside. These are things that you cannot control. The market wasn't just ready. It decided not to go in our favor this time around, but that's fine. Does it make us to change? Does it make us to overtrade? Does it make us to think too much about the trade? No. All that matters, especially at this stage of trading I am at now, it's all about capital preservation, risk management, very important. You can see the other trades we won, and you can see that this alone, the loss is very minimal compared to the upside we would have gotten if we actually won this trade. So that's it. Now, let's go over to the next trade. For USDCHF, we were anticipating a continued bearish momentum. You can see here that we had a break of our counter trend line, but the market came midway after giving us some handsome profits and decided that it wasn't ready and decided to go back all the way. It stopped us out and has now actually broken this daily zone in yellow. So these kind of things happen. You can see that this type of trades, if you are not mature in the game, you can get very furious about it. Your mind can start giving you a lot of negative interpretations about trading that you might eventually want to give into impulse trading, or you might just say that, oh, this strategy doesn't work, and you decide to want to tweak some things in your strategy. Don't do that. These kind of things happen even to the good traders. You can see how we've won a few trades and we came back to lose 2 trades as well. These kind of things happen, but what matters is, do you have a formula for ensuring that you are maximizing your wins while minimizing your downsides or your losses in forex? That's all that matters. These losses were controlled, pre-planned, and accounted for, and that's what separates traders who last from those who gamble with strategies they don't understand. How are we still green? One word: risk management. We risk no more than 1 to 2% per trade. We have a system of taking profits from the markets when it makes it available to us while preserving our capital. We didn't revenge trade after the losses, and we drawn out every position. Most traders think they need a better strategy, but often it's better risk control that makes the difference. You don't need to win every trade. You need to make sure your wins outweigh every loss, such that your losers don't knock you out. Most traders lose because they panic, scale up when they shouldn't, or take random setups out of emotion. Remember, discipline beats hype every time. Let's talk about what I'm looking at next for this week. Actually, just 2 pairs, CAD JPY and NZD USD. Now here is CAD JPY. First of all, I'll put out there that CAD JPY is bullish, and we have levels like you can see they have all been drawn and plotted nicely. This is the weekly time frame. This trend shows that CAD JPY is going to the upside. That has been established. If you know how we trade, you usually start from the high time frames, then scale down to the lower time frames to make our trading decisions. But it's good to have a higher time frame bias or context. So in this case, we want to trade to the upside because the high time frame, i.e. the weekly and the monthly time frame, is telling us we are heading north. So we should always be thinking of going north. Now we've come to the daily time frame. Now I see in the daily time frame that we've seen these two zones. So this is the major zones above and then below, and those are the two zones we will be trading from. You guys know that I love to trade from zone to zone. And now CAD JPY, look at this on the daily time frame, guys. CAD JPY has broken above the monthly zone and has retested it, and in not only retesting it, it's beginning to move to the upside. It's also broken the last structure it created, right? The last structure that was created here. So in case you're not seeing that, CAD JPY has broken this structure right about here. So whenever I see this, what it then means is that because of this good break, it means CAD JPY wants to continue to move to the upside. The likelihood of it crossing back is less, but it cannot be reaching out. But I'll trade what the market presents to me, and in this case, all I'm needing is simple. Let CAD JPY continue to move to the upside like so, just a little bit more, and pull back at least to this zone. So this zone will now become the trigger zone. Once it pulls back and gives us a good entry setup, most likely a counter trend line break and a break of structure, then we'll take this trade to the upside. Simple facts. It has not done that, so we're not going to think of doing that. So the downside is that this trade can decide to move a bit to the upside and then change course and come down, but the pullback might not be small. It might be steep. It might just want to come back to retest this monthly zone. In any case, we'll be waiting for it, but once our setup is clear, we'll get into the trade. For NZD USD, you can see that we have been bearish for a while now. Very simple, straightforward. This trend line shows that we've been bearish for a while, and that's good. Then the next thing is we'll go back to the weekly time frame to see whether there are any chart patterns that I want to negate our intended move to the downside. And in this case, I can't see any chart pattern. I can't see any chart pattern here, so we continue to move to the downside. Now we've seen something remarkable here. Our zones have already been plotted, and right about here you can see that we've had a full weekly candle, bearish candle break below the weekly zone. So this shows that NZD USD wants to continue to move to the downside. However, it doesn't give us the trigger, it doesn't give us the trigger to enter into this trade. All we need to wait for is for some other kind of criteria to fulfill. And in this case, what we just do simply is to go over to the daily time frame. So we now go over to the daily time frame to see exactly what's happening on the daily time frame. Now it's been straightforward here. Before, the trend on the daily time frame was going contrary to what the high time frame was saying, which was bearish. But on the daily time frame, it has been bullish. You can see that it broke structure right about here and then continue to cross to the upside. However, this market has come to break below this weekly zone. On the daily time frame means it wants to conform back to a bearish trend. All I need is conformity. Let the daily time frame, the trend in the daily time frame, conform to what is printed on the higher charts like the weekly and monthly charts, and then give us an entry signal. So in this case, the daily time frame is doing just about that. However, we're not going to get into this trade until this happens. I'll need this level right here to be taken off. So I need this level to be taken off because this level was created by the last low. So this is going to be structure. I need this yellow zone to be taken off, and the market is close to it. Once this red zone is broken, and then we get a flagging pattern that gives us the opportunity to draw a counter trend line, then quick, we take the trade. As easy as that. I'm not just giving you trade ideas. I'm showing you how to think through the trade before it actually happens. That's how you level up as a trader. If you got value from this breakdown, hit that like button and subscribe. I break down real trades every week, no fluff. Watch out for my next videos as they drop because you don't want to miss out on this juicy pro trader content. I'll see you in my next video.